Good morning, everyone. Sorry I'm late. Adam had me chatting this morning, and I just looked down at the clock and heard the buzzer for the opening bell. So I apologize. Let's get this show on the road. It's Friday morning. I'm still putting the strategies on my chart. So I see yesterday the NQ made a major reversal and managed to finish the day rather strong. That was a little bit of a surprise, I have to admit. Okay, I'm going to close Adam's window now so he stops bothering me. Wow, they're really pushing hard out of the gate. What's going on here? And I said I was going to take that first signal this morning, didn't I? Look at that. Just another day right out of the gate. The market posting a huge move. This was yesterday's phenomenon also. All right, well, we're just going to have to wait for another opportunity. I'm sure we will see one of those. Friday mornings are always the kind of day where traders seem to get busy early. Yeah, like James says, wow, nice move. Day would be over. Yes, sir, it certainly would. Here, just for giggles and grins, let's see here. We have our first micro-macro cross signal. And this is, again, it's not a first micro-macro cross necessarily because the trend lines cross, which they did not here. But when your hawk goes all out of sync and then comes back into sync, so you'll notice bar colors have changed, trend lines have changed, filter has changed, it comes back. This is as good a first micro-macro cross as this first micro-macro cross where the trend lines actually did cross over. All right. Now, let's say, I love trading in hindsight. Let's say we had took 3/4 of our position on target. Now, honestly, when this was setting up, I probably would have given up the 3 ticks to get above the high. That's probably what my trade would have looked like. So it looks like 4 contracts, got the 150, and let's see where we get stopped. Right there. So we're in at 41.75. We're out at approximately 41.90. So what's that, 15 points? And DNQ, there's a extra 300 bucks, so 450. Yep. Yeah, that might be enough to call it a day. Sure, why not? Oh, you know what? Today might be a good day. The other day we were talking about legging into positions, right? How you might add to positions. A move like this is a move where you're actually better off maximizing your position size right out of the gate rather than trying to leg into a trade. Trading is always about trade-offs, right? Some things will work better sometimes, other things will work better other times. There is no system that is going to work for you 100% of the time. And by system, I mean, a particular strategy. But we have the time today. Why don't we take a look at how we might leg into a position? Now, when I leg in, I have a rough idea what my position size should be. And this is usually determined by experience. Sometimes I'll use the percent model and say, okay, if I took a position like this, all right, I'd probably take 2 trades. I normally enter on a single. So we're working on a first micro-macro cross to the downside. Big up move, so I'm not in a hurry to sell, so I'll probably postpone my entry to here. I'll cover up here. This gives me, I need to eliminate my profit target because I'm going to try to take advantage of runners today. All right, so my trade would look something like this. And now I'm working on a green bar sell, so a lot of yellow bars and such. The market is not really cooperating at the moment. Okay, so here comes that green bar sell. And same thing, I'm not really into, well, I'm trying to capture a larger move. I was going to say I'm not really into scalping on this trade, even though I'm using the hawk for my entry signal. Maybe we would do better on the falcon. The hawk, because it's shorter term, tends to give us a few more opportunities to get into a trade. All right, here we are with yet another green bar sell, and we know that there's normally only 2 green bar sells within a trend. So if this green bar sell does not send the market lower, then we could probably look at taking the trade higher. This might be a good spot for an OCO order, come to think of it. OCO orders, remember, are live the moment you put them on your chart. So you want to, I tend to put them away and then roll them in. To where I want my entry to be. All right, it does appear as though this green bar sell is not having a whole lot of follow through. So here they go. They're going to challenge the buyers to the top side. Or not. Crude oil on a tear. Higher, I should say. Here's the hawk on crude oil. Here's a green bar sell, which, quite honestly, the way this had set up, I probably would have favored a sell. But the market had no intention of heading lower, took off higher and gave us a first micro-macro cross to the upside. And this is where we're at now. So we've hit our first micro-macro cross target. Looks like very rare to see these V-style bottoms in a market like crude. Normally you get a bit of a warning. You get your test of the extreme, which occurred right here. And then the market starts to collapse, gives us our first micro-macro cross, which gives us a fairly easy signal to take. And here too, this was actually pre-open by about a half hour for crude oil. But that little move right there, that could have been your day in crude. Wow, they're really stuck. Okay, we've got a little bit of time. Dan's asking, how did you do that OCO order? Let me cancel that. The OCO button is right here on the side. So when it's gray, it's off. When it's blue, it's on. And I pull on the chart a little bit because if I'm at the top of the chart, it's going to auto size and it's going to be very difficult to place my order without the chart trying to resize itself. So I pull on the chart a bit. I click on a blank spot and then I right click and then I pull down to my order that I want. And then I can move them in because, as I've mentioned before, these orders are live the moment you put them on your chart. Then I can resize it and away we go. Okay, so I'm just letting the trade manager manage the position. You can see it automatically puts in a stop. And what I'm looking for is just a place where the market's going to pause, and it's pausing right here. So I'm going to right click. I'm going to bring in an order above there. No, they're going to stop me here for a little bit of a loss in a moment. Okay, Tom's asking, can you do an OCO order on the Raptor, on the Trailblazer? Let me go take a look. No, there's no OCO style button. You can do the same kind of thing, but your sell order will not cancel. So let's say we did a bracket like this. We'll try it. We'll see whether they go higher from here. Okay, I need to do something with that other order. Oh, did it close me out? Oh, look at that. We got stopped, and the trade manager actually cleared all my open positions. James says he can't stand the blue and the magenta on the Raptor. Good news is, James, you can change the colors up. You can change the colors to whatever you want. All right, so we've got a little active selling going on. We've broken out of this trading range that the market pretty much established out of the open. So now we're looking for the buyers to come back and show us some support here. When we break outside of trading ranges, we tend to look for this type of thing to occur, where they come back, they retest this area now, and we'll see whether or not they can muster a rally. If they pull a rally off from here, that will tell us that the buyers have pretty good control of the market. Just for kicks, let's toss a trend line on here, see how we're doing. Well, they're holding it not too badly. See, but as we drift deeper, that's going to put the buyers in jeopardy. If they can't hold their breakout, then that tells me that there's not a whole lot of interest in buying. Oh, here they go. Okay, I'm going to close out our open orders just because there isn't really anything tradable going on there. But let's see. Oh, we did have an opportunity on the NQ for a first micro macro cross that we could have entered on and tried to leg into our position again. But I fully expect to see some sort of buying effort here off of these lows. Well, here too, we haven't really had a real test of the extreme, have we? We're coming into the hard edge on the Raptor and the Eagle. James says the DAX is at a double top area. All right, thanks for the heads up, James. There does seem to be a lot of selling pressure on the market today. Okay, we're getting a sell signal here at the lows, which is good. So I can set up to sell the lows. Mitchka asks a great question. Hi, Eric. Is it true that the more money you have in your account to trade, the less of a move up or down you need to make money? Yes, it is. Because you are able to take advantage of position size. You are able to afford more contracts. And therefore, the market has to make a smaller move. So just as a for instance, if you took two $50 moves per day, that's it, just 2 trades for $50, and we've easily hit those today. So let's say here's our first micro macro cross. Oops, 1 second. Okay, so here's a first micro macro cross. Let's see, does this hit our profit objective? Okay, so there's one $50 move, and I do believe we had another $50 move out of the open. Yeah, this one did a little better than $50, but still another $50 move. Okay, so right there between those two trades, that's a total of $50 per contract. If you do that twice a day and you trade 25 contracts each time, you will make $500,000 a year. 2 trades. That's it. 2 trades a day, $50. You can forget about all this other mess. You can forget about pulling your hair out. Gee, should I try to do this green bar sell? Should I, the market's come up a long ways here. Should I try this macro pullback? You can forget about all that. You can take 2 juicy looking trades per day for $50 each and make $500,000 a year if you can afford to trade 25 contracts. Now, I know everybody says, Eric, I can't afford to trade 25 contracts. All right, well, what if you traded 5? That's still $100,000 a year. That's still a lot of money. That's still more money than most people make working. Okay, so you can't trade 5 contracts. How about you trade 3? That's $60,000 a year. Still a lot of people working a lot harder than finding 2 trades a day to earn $60,000. All right, you can't afford 3 contracts, do 2 contracts. That's $40,000. How would $40,000 impact your lifestyle? Probably in a positive way. Can't do 2 contracts? Even if you did 1 contract, 2 trades a day for $50, that's $20,000 a year. So let's say you're starting with a small account. Say you're trading a $10,000 account or less. If that is your focus, at the end of the year, you can anticipate maybe a $20,000 profit. So now all of a sudden your $10,000 account is actually a $30,000 account. And let's say you did that again for another year. Now your $30,000 account is feasibly a $50,000 account. Okay, well, after 2 years, you've got some pretty serious clout. And maybe now, you can look at, you can't really do 25 contracts with a $50,000 account, but you get my point. The big traders like the Wall Street firms and such, you've probably heard, they trade for fractions of a tick. They trade for 16ths. They actually call them teenies. That's the nickname. So that's all they're looking for. They're looking for $12.50 a tick. Or, pardon me, a $12.50 move. So, well, on something like the E-mini, that would be a full tick. But they're just looking for something so insignificant. And here I'm going to try to leg into this position again. So let me set this up. They're looking for something so insignificant that you or I wouldn't even consider it. And we can't duplicate what they do on the floor. It's just not possible. But the point is they go in with size. They go in huge. So that little fraction of a tick actually means something. Okay, so here you see that my position size, had I sized myself and gone all in, all out, I had 4 contracts in place, so I would be up another $200 here. As it is right now, we're pushing, $70, $75 in open profit. So I'm hoping that this move has got some momentum to it, which will hopefully allow me to leg into a position to add more contracts. Otherwise, I've kissed another $200 goodbye. Remember, because I had a $200 trade here that I got $15 on. And now I've got another $15 open. Woohoo! I'll treat you to a Starbucks. Michika's asking, so do you need about $50,000 as a startup account? No, not necessarily. The nice thing about day trading is the margins are less. You can start with less. I always tell folks, the smaller your account, the more you should take profit when you have it. Like if I was trading a $5,000 account and I'm $100 to the good, well, this one's accelerating pretty good. But here I'm up $200 on a $5,000 account. That's huge, huge return. I would be taking that money. I would not be risking another nickel of it. But I worked with a fellow who was trading a $300,000 account. And out of his $300,000 account, we were only risking 0.25% of his account because that's all he had to risk to get any sort of size. In fact, if he had tried to do 2% of his account, we would have had to spread him out across the E-mini, probably the big Dow, and a few other markets, because he would have slipped the market. You know, he would have gone in with a 50 lot order, and he would have caused the market to gap and do all kinds of stupid things. It's a nice problem to have. Slipping the market, unfortunately, is not something I need to worry about at the moment. But the more money you can start with, the better. And let's say you have $10,000 but you only want to risk $5,000. You should still start with the $10,000 and promise yourself that if you lose $5,000, you'll stop trading the account. And please have the discipline to do that. The reason I suggest you start with the $10,000 is because you're going to be able to afford margins. You're going to be able to try different markets. You're not going to be stuck just trading the one market. It just gives you a lot more flexibility, a lot more options. Yeah, James is asking how many contracts on that $300,000 account. I forget exactly, but let's see. If he was trading 2%, that's what, $6,000? And the NASDAQ is $20 a point. So even if we had a 4-point spread, that's $80. He could do 75 contracts. That could cause a little slippage. The market like the E-mini could absorb it more readily, but even there, you probably have to leg into it a little bit. You know, enter 20 at one price, 20 at another. We're getting a 3-arrow consolidation. I'm looking for that 4th arrow. All right, here we come. We're into this macro pullback phase again. They're actually getting a little bit stronger. Look at that. If that goes into yellow bars, which if they're not serious about heading lower, I hope it does. There we go. Now, a 4-arrow consolidation is actually one of those orders that I will take on a yellow bar. It's perhaps the only order I will take on a yellow bar. Now I'm going to turn off my... I think they're going to go higher from here, but I'm just going to show you something. I turned off my stop strategy because it was against the market. Right? It was down here. See, it was down here, and if prices headed lower, I did not want them to trip it up. That's what we saw the other day. Okay, so here's a green bar sell. Now these are not quality trades. This is not like this trade that we were looking at back here. I think they're going to try to make a push higher. That's how it's looking to me. But the green bar sell, it's not something that we have to jump on. We can use it as an early warning. It's almost as though we've had our test at the extreme here. All right, so there's the failure of the green bar sell. Let's see if we get that first micro-macro cross to the upside. All right, let's put that away. Let's see what else we have going on. Scalp signals, in crude oil, but it's into yellow bars, so we'll ignore that for the moment. Soybeans made a very nice move lower. right out of the open. First micro-macro cross signal right here. Great move to the downside. Macro pullback signal, struggling a little bit, but it did hit our profit objective. So everybody's playing nice on a Friday, which is nice. Okay, here's the eagle. And we can try the same thing here. We can try legging into a trade, even though the eagle normally goes with larger targets. But again, we have a nice little range here that we can take advantage of. You can see the eagle doesn't react as frequently as the hawk does, so legging into a trade like this could be a little bit more difficult. But this is our trend change signal, and it does look like we've had our test of the extreme up here, which is what we want to see before we get our trend change signal. And I chose to enter below the low. I chose to give up a couple of ticks versus entering at the hash marker even below the ATR. And why don't we put the swing high low on for our stop strategy here. And we'll keep an eye on that. Should be getting a raptor signal. Oh, the raptor fired early off a double pullback, came out. All right, no raptor signal just at the moment. Oh, here's our first micro-macro cross signal again. And I'll probably risk it like so. I want to make sure I can take out these lows before I start rolling my stops. Notice too how the momentum seems to be waning a little bit. I still think we're going to head lower here, but this 4175 area seems to be a little problematic. The raptor working on a warning dot. Oh, warning dot disappeared. Ah, Phil says multiple Fibonacci confluence at this area. So fib traders are jumping in and out. Hmm. James asks, my Raptor has a MA line, moving average line. Why doesn't yours? I don't know. If you go to your indicators, is there a moving average that you've added? Or you may have I don't know if they've done another upgrade and didn't tell me. Sometimes they do these things. They'll add things and not tell me. All right, well, here, we can do this on the Raptor also. Why not? We'll try to leg in across the board. Normally I wouldn't do this. We're going to cancel the profit target. And I'm going to hold this stop back just a little. Okay. All right, so now let's look for opportunities to leg into our trade. Oh, we could have done one on the Falcon too. Okay, the Hawks come down far enough now that I'm going to engage my stop, I think. Now, when you're legging in, this is an alternative also. Sometimes you can just take the new signal. So we've got a warning dot. We know that there's going to be a signal print right there. We've got this trade at break even. Oh, I've still got my OCO on, sorry. So we could use, you could use alternate signals that the Hawk is producing as places to enter also. Normally what I like to do, however, is if I see the market struggling or if it makes a little bit of a swing, so I have a defined area of support, then that will give me a place that I want to enter below, adding to my position. And you're going to notice here that Trail Manager or Trade Manager will add to my stop loss also. If we finally catch a move though, come on down. I'd love to see them tail off, say, to around 41.60. That would make for a decent move. Huh, that's interesting, Jim. Jim says that his Raptor looks similar to the NQ up here. I'll have to find out what's going on with that. We'll try to give ourselves a little bit of staying power here. Oh, they stopped me again. So you can see, like I said, there's trade-offs with everything. We've had multiple good signals today, but by trying to leg into a trade, we haven't really realized that much profit. Yeah, we're up about $100. I know I did this silly trade over here. Whereas if I had just gone all in, all out, I'd probably be showing at least 300 or 400 profit by now. And you would think, in hindsight, looking at this, you would think, yeah, this is a pretty good day to try to leg in. But of course, the trade management is such a challenge on a day like today. Even with our Eagle trade and our Raptor trade, where we're using the swing high-low to protect our position, we're going to be taking some heat here. Interesting. The Raptor actually gave me a different swing target for my stop than the Eagle. I believe our Eagle stops are up here at 41.88. I don't want it to get too much into this cloud, because once it starts to get into the cloud, it's going to be hunting for the hard edge, and that's really going to put our stops at jeopardy. Oh, and here's this pink-blue combo, which last time we saw go screaming to the hard edge. So why don't I give myself that much? Yeah, James says, yeah, try an FOMC day. They suck. Well, usually they're, they're not tradable. No, I know they're not. A lot of times they look like this, where the market goes down and it goes up and it goes down and it goes up. Usually fairly easy to identify on something like the Hawk, because you're getting all these yellow bars, all the breakup here. Your other tools also are going to be looking very choppy. See, we're starting to introduce more yellow bars, another green bar sell. This market's just looking for some sort of momentum. Raptors come out of the cloud with a sell signal. All right, I think we might be able to enable our stop again. Now we're going hunting for the lows. So the sellers have moved the market down. Buyers have said, nope, this is as far as you're going to go. Sellers dug in here and said, we're going to push this market lower. Now it's up to the buyers. If the buyers force the market here and the sellers cannot recover, then we're very likely going to get stopped out, and it's time for us to go. However, if the sellers can get them below here, below 41.71, then we're in good shape. Because then we're going to start to see all those buyers jump ship. Yeah, see, here they are. They're trying to fight it up. This bar right here is going to tell a lot about which way this market is going to want to go from here. Come on. There we go. There we go. Come on, somebody take 71. There we go. Oh, 71 quarter. Come on. You know you want to. Come on, get down there. $71 half. 71 quarter. Come on. Come on. There we go. That was hard work. Oh, gee, Eric. I'm supposed to be showing you how you can leg into a position. This would have been a darn good place to leg into the trade at another position. Are we getting another hesitation? Maybe a little. Maybe I'll do a little bit of a cheat and enter one below here instead. I should have sold here. That would have been the place to enter. All right, so now I've got two positions in. Now I've got a lot more risk open. Normally what I do when I've entered my second position is I'll get the trade down to break even. Because where I was back here, I've got $340 open. Now I have to judge if that's an amount that I can afford. Okay, maybe I'll hold the stop back a little bit, but a lot of times what I'll do out of habit once I enter that second one is I'll get the trade to break even. Now you guys know, you've seen me. If I have, well, we all have faults as traders, but one of my faults as a trader is tweaking myself out of a good trade. So this is perhaps the most tense part of the trade. All right, so here we have another little swing point that we can short below. And with my trade at break even, what I'm risking is this portion through here, right? So my other contracts aren't costing me anything. You'll always have to be conscious of how much risk you have in play. No, they're going to go too high. All right, well, see, once again, the trade-off, right? We had, what were we up to? A couple $100 in open profit, and instead I got nada. But when you hit that one time a month or one time every couple of months where the market just explodes and everything works like it's supposed to, and people who write textbooks get all giddy because things are actually working the way they said they should work, you can make an awful lot of money. All right, well, our Eagle trade is still working. I'll leave the swing high-low strategy in play just to see how it's going to play out, but we do seem to be finding some support, don't we? Retracement maybe to the hard edge. Another sell signal. If the Eagle continues lower from here, we should see the stops roll here because we've set our strength, our stop strength at 5, which means there needs to be 5 bars going in. 1, 2, 3, 4, 5. It should roll above here if this current bar finishes lower. Which it doesn't look like it wants to do. Everybody pack up their toys already and go home? This is what I was thinking we would see as a profit target down here, 4160. This could well be an early reaction to this area. Come on down. All right, I've heard a couple other signals. Oh, here's the Raptor coming out of the band with another sell signal. Once again, I was a touch slow on the stick there, but that's okay. We got the Eagle working for us. For arrow consolidation here in the Hawk. 1, 2, 3, 4. Now remember, your 4 arrow consolidations a lot of times are going to have this shape like a bear flag in a downtrend or a bull flag in an uptrend. That's why I'll take them off of yellow bars, because there's some fundamental price action going on with these. They're not just the indicator telling you that it's ready to buy or sell. You can see visually as well that the market is heading lower. Oh, I'm surprised. I thought for sure that was going to be 5 bars. 1, 2, 3, 4, 5. No, I guess not. Oh, and I keep forgetting to add to the position. All right, here we go. Eagle trade. A lot of times when I'm adding to positions, I will only trade one market because you can see it gets a little bit confusing. So I should have added here. I should have added here. And when I did that, I should have brought the stops to break even. And now here we are at 41.60. And now the buyers are going to dig in. And our stop did roll, just for whatever reason, not as fast as I thought it should. Fantastic, Dustin, knocking it out of the park. Dustin hit $200 on Sim, or sorry, $2,000 on Sim today. Fantastic, Dustin. Way to go, man. Just remember, if you can do it on Sim, the simulators nowadays are so much better than what they used to be even 5-6 years ago. If you can do it on Sim, you can do it for real. Just do things the same way. That's why when you're on Sim, it's very dangerous to treat this as a video game. You don't want that. Okay, it looks like they're going to slip down to 55. What are we in open profit already? $400. You know, same as always, it's your money. $400, $350, $400. If that's dear to you, punch out. And this is again one of those reasons why it's to your advantage to trade multiple contracts, because it gives you some management options. But I know the buyers are going to dig their heels in here. Yeah, James says, money is money, sim is sim. It's not the same psychology. Well, yes and no. I know what you're saying, Jim, and you are right, but really when it comes to learning to trade, it's the best we got. And, you know, you should start small when you start with real money, no question, because your blood is going to run a lot hotter. Your emotions are going to be more intense. And you can't help it. Your head's going to get a little cloudy. You're going to start second guessing yourself, but you can work through it. And it is possible. I've seen people do it. It is possible to recreate real money emotions in Sim. You just have to take it seriously, really. The fellow with the $300,000 account I was telling you about, he had a very hard time taking his sim trading realistically. But I suppose he figured, I got $300,000 to trade. I don't need to trade in sim. I'll learn with real money. Okay. But for everybody else, it's probably the best way for you to start. And like I said, just try to make it as real as possible. Hold yourself accountable. Force yourself to earn a profit. Journal your trades. That's a big one for helping you be accountable. Because when you write your losers down, all of a sudden they're more real. Even though they're just in sim, they're more real. Now all of a sudden you have a written record of your losses. And you might be able to explain it away if you didn't write it down. You might be able to say, oh, well, I would have never really taken that trade. But when you write it down, you can't do that anymore. You can't make that excuse. And a trading log doesn't have to be anything fancy. This is a screenshot of a trading log of mine from a couple of years ago. And you can see I'm just using a spiral notebook. I'm just writing down the trade parameters, the time I took the trade, the direction, the tool. The E stands for eagle, H is hawk, F is falcon. My entry, my stop, what I saw, why I took the signal. I usually highlight things that I realize after the fact or things that I've learned with stars, because that way you can kind of learn what you're doing wrong. But whether this were sim or real money, there's no way, I can avoid admitting, I took a $340 hit. I took a $300 hit. There's written proof. So a trading journal will go a long way to helping you become a better trader. And it's almost free. There's nothing to it, really. Like Curtis says, 300,000 becomes 50,000 pretty fast. Yeah, I've seen it done. Dustin, Mitchka wants to know how many contracts you were trading to make your $2,000 day. Oh, fantastic. Dustin says, too, seems like my winning days are becoming more and more. My losing days are coming down from $1,000 losers to just a few hundreds. Fantastic. Yeah, you're learning a great lesson there, Dustin. You're learning how to control your losses, really. That's a lesson a lot of people have a hard time with. Dustin says he's trading 4 to 5 contracts. Okay, good for you. Oh, here's something interesting. Let's take a look. Now, Peter, you mentioned this on the Falcon. Are you talking about the Falcon or the Raptor? Because before I share this with you, the Falcon. How in the world do you get a yellow bar on the Falcon? Well, I'll read you what Peter wrote. First trade of the day was a loser. I don't like Fridays, so I only trade one contract in the E-mini. However, when I do see a yellow bar on the Falcon, I double up. Just caught the down move for $700. Way to go. Fantastic. I made my $400 for the day. Way to go, Peter. That's fantastic news. But I don't know which yellow bar you're looking at, because the Falcon only prints green and red. The only two tools, unless, once again, you guys got an upgrade that I didn't, the only tools I know that print yellow bars are the Raptor and the Hawk. And I know yellow bars on the Hawk are not always the most reliable looking signal. Ah, okay. Peter says yellow bar on the Hawk, and he's got it set on 8 ticks. So he's a little bit higher, and that would be on the E-mini. Interesting observation. Thanks for sharing that. I'm going to take a look at that later. You know, it's always fun to learn how you guys are using your tools, because sometimes people come up with some pretty innovative hacks, let's call them, for lack of a better description. Okay, crude oil stuck sideways since that big rally up. Let's see here. Here's the Hawk. So crude on a big tear to the upside. Good follow-throughs on the first micro-macro cross, the macro pullback, even the red bar buy. And this one would have been interesting because normally we don't see the test of the extreme come this quickly. Right? We don't normally see this kind of stuff and then the market head lower. What we do tend to see is the market come down, and then we get a test of the extreme before the reversal, and the market head lower there. So this red bar buy looks a little bit stronger than a red bar buy where perhaps we had a retracement over here somewhere. Red bar buys, I tend to be very aggressive on the entry. I'll take it on the hash mark because I don't want to make the market work too hard. And I'll try to give it a little bit of wiggle room on the downside, because sometimes it will engage, it will wander just a little bit, retest the lows before it heads higher. So I don't want to get stopped out right on the low, but I will take it right on the signal. See, there's that little bit of a wander that we get sometimes. And then it finally went on through and hit our profit target. Red bar buys, green bar sells. I do tend to go all in, all out also. But if you haven't noticed already, that kind of suits my personality. That's what I'm most comfortable with as a trader. I'll just take the profit. Thank you very much. All right. Well, they're doing their best to recover here. I'm not much for Friday trading either, Peter. I like early weekends. Oh, Dustin's asking about what Peter was saying about the yellow bars. Peter's running an 8-tick hawk on the E-mini. And he says when he sees a yellow bar, he'll double up on the position, on the signal. Now there are some things that are, as you trade, you're going to learn there's some things that are unique to each market. There was another trader who would follow the E-mini, and he was trading the Falcon, and I forget the exact strategy, but it was either 3 minutes before the open or 3 minutes after the open. He would take the first signal. So let's see, where's the open here? And this is the NASDAQ too. This was something that was particular to the E-mini. Maybe it was 3 minutes after the open. No, maybe not, because it would have been too late. Maybe it was 3 minutes before the open. Yeah, that might have worked. Anyways, it was somewhere around the open that he was taking the first signal, and he didn't have a huge profit objective. It was just almost as though to set the tone of the day. He wanted to bank a winner. And so he found that had a fairly reliable, it was a fairly reliable trade for him on the E-mini, right around that opening buzzer. But it's not transferable. It's not something that you could take and say do on crude oil or even on the NASDAQ, even though the NASDAQ, the Dow, and the E-mini do have a tendency to move together. So you can see we've made a huge retracement right back to this 4170 area. We did get an opportunity on the hawk for a little bit of a scalp there. The Falcon is working on a trend change signal. However, you do need to be cautious with these because which way is the market moving today, boys and girls? Yeah, see, even Peter says he only does that on the ES, only on the E-mini. The market is in a downtrend, right? So we don't want to become too aggressive as buyers. Is this a buy signal? Absolutely it is. It is a trend change signal. And we know it tends to be a fairly reliable signal. However, given that we're going contrary to the trend, we want to protect ourselves a little bit. Maybe dial down the risk amount. Maybe wait for a second push on the entry. And by that, I mean we let the market show us, let it engage, show us how high it's prepared to go, and then enter above there. And run as deep a stop as you can manage. Let's try it down there. And because it is counter trend also, I would probably look at taking profit on target versus trying to hold on to it. So there's just a couple simple things that you can do to try to keep yourself from getting in on the wrong side of a trade. Here's a double dot signal. You know what? We haven't done one of these for a while. A double dot sell signal on the Falcon. And I can tell you that the hash mark will print here. The nice thing about the double dot is that it usually allows you to keep your risk relatively small because the trade parameters tend to be fairly tight. The downside of the double dot is that it is a counter trend signal. Now, it's counter trend to this portion here, obviously. It's not counter trend to the major trend. But when we get a double dot signal, we always want to look back into the chart and be able to tie it in with something. So we can say, yeah, okay, the market came down, reacted here, had a good sell-off after hitting this resistance area. Well, that's what's happening again. The buyers have forced the market up, and now the sellers are saying, well, wait a minute, boys and girls. We sold it from here. Why would we not sell it again? So that's what we're doing. We're jumping on board with the sellers now. Plus, we haven't really had a test of the extreme, have we? We've had this run up. We haven't seen a test of the extreme lower. So there is a possibility, a good possibility, that the market will move lower short term. So that's why this double dot signal is a little bit more favorable than just any old double dot. See, like this double dot up here, even though it worked out very well, was not so easy to take because, well, there's nothing to tie it into, right? There's nothing over here suggesting that the trend will end at 42.04. Whereas where we are over here, we have a little bit more, structure. And we can say, yeah, all right, maybe the market will press lower. And right now I know everybody's scrambling for their fib tool. And they're going, wait a minute, where is he on that? And our profit target would be just near the 62% line. But like I say, the best part of these trades is that you have a definite place to cover the trade above, right? It's very obvious if the trade fails here at 41.7350 that we are on the wrong side of this trade. So it looks as though we might be working on an early trend change signal to the downside now, interestingly enough. Ooh, and here we're coming back with a buy signal. So real trouble spot for the buyers and the sellers right now. They're really fighting it out. Okay, coming back with our trend change to the downside. James, what was that time and sales tool that you mentioned the other day? The other day, James, when we were talking about time and sales, you said there was a tool from Adam that you like to use. I've had a couple inquiries about it. The tape speed reader. All right, let's see if I can't get that from him and show everybody what that looks like. James says he likes it because it shows buying and selling pressure, which is always good to know. All right, so there you can see we just reached our profit objective. So that was again, a better quality trade. Rick is asking about my email address. He's saying he sent me a couple emails but didn't get a response. The indicator warehouse address no longer works, so please use that one, eric@supportandresistance.com. Okay, this is a little problematic now that we're getting a little more buying going on here. 4160 being a little bit of an obstacle again. Yeah, looks like they're going to start digging in. So once again, it's one of these scenarios where we've got $100 in open profit at the swing. We've got $200 in open profit. Like, there's never anything wrong with just punching out of the trade. Anytime you guys can turn a profit on a trade. Really, it's, you know, hats off to you. With so many people losing money trading because, well, quite frankly, they're doing foolish things. So this higher swing here is going to be problematic. Well, we'll let this trade close out and we'll see if there's anything interesting going on elsewhere. No, not really. You see our hawk has gotten a little bit more range bound. The falcon recovered after our double dot sell. It's now coming back with a buy signal. So this higher swing right here, we're right back here challenging the sellers again. This is the sellers' last chance to push this market down. If they fail here, there's a very good chance the buyers will move the market higher. Oh, come on, sellers. Are you not even going to put up a fight? What's the matter? What's the matter with you guys? Oh, we know there's sellers there. They were there just a moment ago. Nope, they're walking away, and we just got a first micro-macro cross signal to the upside. We get a chance on a second push entry here. So it's the kind of scenario you'd want to take it above the high. Or are they just going to chop around now? It's almost to that time of day where they're just going to, yeah, there they go. They're starting to slip. It's getting to that time of the day where they're just not crazy about taking any new positions because, well, it's the end of the work week. And that might be a good reason for us to make it an early weekend also. If you are trading this afternoon, still kind of bearish on the NQ. I don't know. 41.55 is the big number here, but there's still lots of room to trade. Currently, it seems like we're stuck kind of in here, 41.75, 41.55. That's a big range, no question. But until we get outside of there, trading could be a little bit choppy. Oh, here we go. They're going to press 41.75 again. If you are looking at crude oil, we didn't do much with crude oil today. Crude had a big run up. This is the eagle on crude oil, hovering around 45 a barrel. Looks like they should come back down here and test 45, but in spite of the early buying, crude oil seems to have gotten a lot weaker. You see, we've had a test of the extreme right here. We're challenging the support right here. So if it breaks down through the support, we can probably expect a little bit of a hiccup through here, but don't be surprised if we see it sell off. Now, crude oil is one of these markets that does not tend to do very much most afternoons, so you're not going to want to get too heavy into crude. Soybeans, same thing after an early sell-off. Beautiful hard edge bounce here, green bar sell, early sell-off. They've pretty much spent the rest of the session going sideways. So